Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Lucid Motors, ticker symbol LCID. And so I wanted to do a follow up on this one. Pretty excited about it because a couple weeks ago I put out a video suggesting that Lucid would be returning to right around $3 a share. And yesterday, on Thursday, February 22nd, Lucid dropped almost 17% after earnings, hitting a low on the day of $2.88, bouncing a little bit and closing at a price yesterday on Thursday at $3.08. So, I'm pretty proud of that. I'm pretty proud that while approaching $4 a share, marked here by this red line, lots of bullish sentiment, lots of people telling me that fundamentals are strong, prices going higher. From looking at Max Payne, from looking at these levels that I had identified, I had conviction in my understanding of the stock and my understanding of the chart that price would be returning to $3 a share. And that is, in fact, what happened. When everybody's screaming $4, got to take a step back, got to look at the chart and the data at hand and see where it's going to. And it did return to $3 a share. And so, just some of the levels that do stand out to me. I had gone over in previous videos, but then I added a few more here. So one that I did add that is to the upside is $3.56.5, which was the low on the 21st. So that was Wednesday, just before earnings were reported in the after hours and following, this gap down. So that does need to be retraced to. We do need to fill that gap at some point. But first, we do need to find our footing. And I do think that this gap will be filled on our way to $4 a share. I still do think that's happening, but I do think that we need to find some support first. And so some levels that do stand out, one that I just added here is $3.11. That was the low between the high here that was hit on January 30th, which was at a price of $3.82. And then we did hit a higher high on February 16th. That was at a price of $3.92. So just up 10 cents higher than that previous high. But the low between those highs was $3.11, hit on February 2nd as well as February 6th, with the day between February 5th hitting a low of $3.12. So that being one level that I thought price might be returning to that could be acting as support. Another level was the 618 of this Fibonacci retracement, going from the low on January 19th up to that high on January 30th. And so that is at a price of $3.02.9, or right around $3.03. Also, the psychological level of $3 a share just being a round number, I did think price could be returning there. And then also this purple downtrend. So if we take a step back, we can see where that originates from. That is based on the lows going back to the end of 2022, before we had this big run up from right around $6 a share up to over $17 a share. So pretty remarkable. And that run up occurred over the course of about 1 month. So pretty incredible to have experienced that. And the other pivot point is based on the low, I believe, of November 9th. And so we can see that did act as support there, although granted that was the pivot point. And then that had acted as a little bit of support over here, a little bit of resistance here actually on January 24th. Did get rejected from that level and then tested it as support when we hit right around $3.11. And now it does look like we did wick below that level, hitting a price of $2.88 yesterday. And so I do think that we will be finding support right around $3 before making an attempt to get back up to $3.50 and $4. I do think that is still on the table, but I should caution, as always, there is still a possibility to go to the downside. And so with that, I do have this extension from this Fibonacci retracement here that is at a price of $2.57.6. That is the 1618 extension. That does also correspond with the lows over here at $2.54. So I do think that while I am hopeful and I do think it's likely we will find support right around current price, it is quite possible we could dip down about 50 cents more, so it is good to prepare for that because we might be hitting 250 before we hit $4 a share. But if I do look over at max pains for the next few weeks, they all seem to be right around $3.50. So it is unfortunate that current price is below those levels, but that does suggest that price might be going up in the next few weeks. So I am hopeful about that. I do think that $3 a share is a great dip buying opportunity, but it's quite possible $2.50 could be an even better dip buying opportunity. So do keep that in mind. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching.